Hello, this is John Butler, Investment Director at Southbank Investment Research, and I'm with you today for a macro and markets discussion joined by Ian Pierce of the Motley Fool. The Motley Fool is a well-known independent financial research group that has been around for decades and has earned a good reputation during that time. And so we're going to dive right into it now. Ian, welcome.
Morning, John. Thanks very much for having me here.
Thank you. Many viewers may not be familiar with the Motley Fool, notwithstanding having been around for an awfully long time. Could you describe briefly how you approach markets, how you think about markets, and kind of your mission statement? What is it you're trying to provide?
Absolutely. So our big thing is that we're long-term investors. We're thinking 3 to 5 years as sort of a minimum holding period for most of the recommendations that we make. We're of the view that we're not smart enough or capable enough to, guess where markets are going to go in the short term. So we're looking for something where, because we're bottom-up investors, where we identify a company that has the right qualities that in the long term we think will allow it to outperform the market. So that's the big thing. And the other thing that we really focus on is fishing where others are ignoring opportunities. So be that small cap stocks, anything that's out of favor in the current environment. That's where we think a lot of value can be provided for long-term investors who are willing to hold through a period where that sector, those companies, for whatever reason, aren't in favor. If you can hold on for the long term, we think it can work out well.
Okay, so is it fair to say that it's a fairly traditional, somewhat conservative, value-oriented process?
I wouldn't say that. I would say we do have services that are value-driven. We do have, throughout all of our services, try to create a investment process that looks for value, but we aren't necessarily saying, okay, it has to be a low price to book or it has to have a high dividend yield. We are very happy, and we made our name in a lot of ways, especially in our American services, investing in growthier tech stocks. And so that's very much still a part of what we do. But even with those, we do try to look for where is the value in this company. Is it trading at an astronomical valuation that it can't grow into? Or is it just trading at a lofty valuation that if we're looking 10, 15 years down the line, it can grow into? So that's our process.
Okay. Well, as long as you're explaining, of course, how you get to a given idea, I find that's extremely important because there's a certain investor type who simply wants to be told what to do and doesn't care. But in my experience, our client base, they actually kind of want to know, how did you get to this idea? Is it primarily value-driven? Is it a bit more growth-driven? Is it a special new theme or story for the future, whatever it might be? So it's good that you're offering up that explanation if you're approaching investments from multiple angles. And speaking of multiple angles, if there were say 3 hot topics or 3 particular angles right now that you would be focused on when looking at the market and trying to identify the best opportunities, or for that matter, what to avoid, can you think of kind of maybe a top 3 that Motley Fool's focused on at the moment?
Yeah, so one of the things I should state is that all of our analysts have complete discretion over what they think is the most attractive segment of the market. So we've always had people that are more interested in growth, more interested in value. I'm very lucky in that I've kind of vacillated between the two. So I think my top 3 right now are, well, no surprise for number 1, interest rates. I think it's the question at the top of everyone's minds, just looking at inflation, looking at interest rates, because I am a value guy. I do like to do, a DCF for most of my recommendations, 90% of them. If it's
just discounted cash flow,
sorry,
right? So just in case not everyone watching is familiar with the jargon, right?
Absolutely.
Okay.
And so if you do a discounted cash flow analysis of a company, if you plug it into your model, it's a very, very 1-to-1 ratio between what's the discount rate or the interest rate that you're using and what's the value that is spat out at the end by your model. And so it's really important right now. And well, it's always important, but it's even more important now when we're not sure the path of interest rates. So I would say number 1 is just in this I'm not trying to guess where interest rates are going or
but you have to have a view of some kind.
You have to have a view. Exactly. Right. You have to say, okay, in 5 years, the discount rate that we want to discount this by, this could be this. So that's the number 1 thing.
Okay.
I think the second thing is, as I said, we love to go where others are a little afraid. And so, well, less so in the last 4 months, but especially towards the end of last year, growth stocks were, completely out of fashion.
Very much so.
And there were a couple of opportunities in there where we said, okay, you know what? This company had a phenomenal 2020, 2021, and now it's just been hammered. But really, fundamentals on the ground, the company is making good operational progress. And sure, we're going to have to discount their future cash flows quite a bit now compared to,
Because interest rates are higher.
Exactly,
Right,
yes.
right.
So now you've got to plug in 12% as your discount rate instead of, I don't know, some people were using 8%, which was a bit wacky for me, but, they were using that for a couple years. And so that was one thing that's been really important to me, I think, is to look at, okay, why is it out of favor? And is there value there? Because we are able to hold for 3 to 5 years. Our members understand by now that, hey, there's going to be ups and downs. I don't know where the stock's going to go in the next 20 weeks, but I'm reasonably confident that the company is going to be in better shape than it now, or in 5 years than it is now. And we're willing to hold through that. I'd say that would be number 2 for me.
Okay.
Number 3 is a big one for me. Is just if I could say that, is defense stocks. Because we had a period, obviously, in early 2022 and throughout the rest of the year where defense stocks really rallied, and they've given back quite a bit now. And we're actually, because I think a lot of investors they migrated into the sector. They really didn't understand. So they understood, okay, geopolitics come back to the fore. Defense budgets are going to leap right overnight, and these companies are going to rake it in. And that's not really how the defense sector works. You have to go through procurement, and it's going to take years, and you have to worry about the politicians actually passing the bills to, authorize more spending. And so it's a years-long process. And so we've kind of seen over the last year quite a few of the generalist investors rotate out of the sector. And now those companies are starting to look, in some cases, quite cheap to us because we do think that eventually that spending is going to be authorized and they will take advantage of that. So yeah, that would be my top 3 right now, I think.
The defense one's interesting because it is a sector which can also be argued as essentially uncorrelated. That is, geopolitical risk, good luck correlating that with anything, right? It is quite random. But then, of course, if you do get into a typical cyclical downturn, it's not clear that defense stocks are going to suffer much, if at all. And so we have also been looking at defense stocks, and that's kind of the way we put it to our subscribers, was that, yes, you've got this elevated geopolitical risk, and it does suggest the sector can outperform, but even more so, put it in context, because we're actually getting cyclically quite bearish now. And so the defense sector also plays kind of that defensive role within that sort of counter-cyclical portfolio. And there are other sectors, of course, that tick that box. A consumer, non-discretionary, whatever it is. But people frequently forget that the defense also plays that role.
And in America, especially, where politicians can't agree on anything, seemingly the one thing they can agree on is we're going to hike the defense budget. And so we love that too, because, you see, President Biden putting forward a budget, and then Congress is going, you know what? We're going to put in a bigger authorization. So yeah, it's a sector with a lot going for it.
Certainly in the U.S., I understand how the politics work, right? It seems everyone in Congress has at least one defense business in their backyard that they've got to be helping out every time the defense budget comes around.
Yeah.
It is funny how that plays out. Well, look, at the Motley Fool, while it looks like you've got quite a broad remit, you nevertheless, have a pretty clear mission statement, which is to look a bit longer term and to advise people with that slightly longer term mindset, not trading, not get rich quick or whatever it is so much. But presumably, what you do nevertheless does evolve. Does change a bit with the times. And you mentioned to me when we were having our little introductory chit chat that you actually had a new product that you had developed. Could you explain why you felt it was a good idea to develop this new product and what the sort of the mission statement for this new product or service is?
Happily. So the product is Value Hunters UK, and it's exactly what it says on the tin. We're looking for traditional value stocks. And the reason for that is we see, a lot of value in them nowadays, even though the sector or the theme has come back into favor with investors. Suddenly people are looking at value again, but also because it's something that our members wanted. And so we're very receptive to that. And they're saying, hey, you know what, we'd like a bit more of a value-oriented service. And we're like, well, fantastic. We're happy to get, 5, 6 analysts, and we sit down and we talk about what we're looking at in the sector. And we're looking for sort of traditional discounts to, maybe a price book that's trading under what the sector average is. So, there's banks in there, things like that. Also consumer discretionary that's out of favor for whatever reason. So that's the product, and we're very excited to launch it soon.
Well, I think the timing is right. We just discussed a moment ago discounted cash flows and the impact that interest rate or changes in interest rate assumptions can have on DCF. And obviously, having a product now which is able to really focus on that makes a lot of sense. We've kind of left this very bizarre world where traditional valuation metrics are almost impossible to apply because the interest rate structure was so distorted. There was this kind of break with the past, and a simple historical time series analysis wouldn't necessarily be a high quality input into an investment process. But we're kind of getting back to that, a bit of that nuts and bolts of finance.
It seems like it. We'll see what interest rates do because, if unemployment does go up, we could go back to that wacky world of 0% interest rates. You never know. But yeah, for now, hopefully it seems like we're in a place where sanity has resumed in the investing world a little bit. And yeah, we can get back to the nuts and bolts, as you said. So.
Okay, well, fantastic. Well, I'll certainly be reading with interest because I'm curious how you are now approaching value in this somewhat normalized world that we've moved into.
Yeah.
So could you please tell our viewers or where they might get more information about what you do and what the Motley Fool does?
Absolutely. So if anyone's interested, the website is simply www.fool.co.uk.
Well, that's short and to the point. Great. Thank you very much. Well, there you have it, talking macro and markets with Ian Pierce of the Motley Fool. Thanks for joining. I'm John Butler, Investment Director at Southbank Investment Research.